This is Greg Crabtree. I wanted to go through some examples of how to use the tools that we've created. And so what I've done is create a sample company profit and loss statement as well as a sample company balance sheet that comes straight out of QuickBooks. So you can see an example of how to convert this data and fit it into two different models. One is an annual model that gives you an ability to forecast on an annual basis and look at a minimum target or a minimum acceptable target and then stretch performance, and then also then how to take this same data and then look at it on a monthly basis and plug it into our more complex cash flow model, which I know that's sometimes a little bit of a challenge if you're not really a spreadsheet jockey and like to do those things. So the first thing I want to show you is how to work with data straight out of QuickBooks. And so the first thing is, let's actually work with a P&L, which is what most people are more comfortable with. And so what I would suggest is go into QuickBooks and print a profit and loss statement for whatever time frame that you're dealing with. Our cash flow shell is currently set up to run from January of 2008 until December of 2011. But in this case, I'm just going to show you a one-year example where we started with January 31 all the way out through December of 31. And so in this process, it will produce a total. And so out of that total, you can see that what I did is I cut and pasted the sample summary from our P&L template that we looked at, and then also then formatted the area. And so this is kind of we use the other more complex techniques when we're doing it, but this is a simple way for you guys to look at it. And so this is the total column, and you can see that this cell for revenue in this particular company example points up to just this job income number. So in this customer's case, they only have one line item for income. If it had multiple, you can either point it to the total income line or each individual line separately. When it comes down to cost of goods sold, this is our definition of all items that do not have any labor included. So it'll be materials, supplies, any shipping, freight, any of those items that are directly associated with production of revenue, they'll go in here. And you can see in this particular case, I picked out the individual line items of those cells. So rather than picking off the total, you can see that I could have picked this number, but I actually in this case chose to pick each one of them individually. So it doesn't really, either way works just as fine. Direct labor, in many of the cases, you may find that this number may be a little challenging if you've not separated out, but in this case, this particular company example, they had separated it out, but it's down here in the operating expense section. So I point to this cell here that shows the 114,000 and pointed it there. And so this completes what we call the business engine. And so you've got revenue, out-of-pocket cost of goods sold. And the reason for this is this 558,000 represents the economic output that this business has to pay its salaries for its employees and all of its operating expenses. And so once we get down to the operating expenses, we can see the facilities, these are pointing to these, four lines in the P&L. Same thing with marketing. There were two lines here that we pointed to marketing. Admin labor, pointed to both the officer wage as well as the office administration. And so we want to make a clear distinction that even though the officer may be a producing member of the business, we generally want officer pay, except for rare circumstances down here in the administrative section, because as they grow the business, they want to get as much out of the production part of it and more into the management part of it than always being a producer. But in some cases, the highest best value of that owner of the business is to be a producer. And so in some of those cases, we may look at continuing to keep that person's pay up here in direct. Obviously, payroll taxes and benefits, fairly simple and straightforward on that one. And then the catch-all is this other operating expenses. Now you can see that this formula that I've used in the example is a little more complex. And so all I did was, when I'm looking at that one, you can see that I'm accounting for all of the expenses of the business up here, operating expenses as well as cost of goods sold, and then I'm subtracting from it all of the things that I've already accounted for. And so in essence, what I'm doing is kind of using that as kind of a plug. Now I could go pick the individual line items, but I found that using that as the plug is actually the easier way to make sure that it balances. The other thing I want to point out is the other income and expense section. Keep in mind that in this case, watch for the signs. If it's a negative sign, it means it's an expense, and if it's a positive sign, it means it's income. In this case, this particular business did not have other income, but it did have depreciation and it did have interest expense. You can see that we balance the $86,925 balances to the total, and that's kind of the key. Once I get the annual one done, I can then, in essence, copy, this whole range, for the annual, and go back, and then I'll need it at a later point. I can copy all of this and go backwards and copy in for each month. And so I've got how many, if it's 12 months or 24 months or 36 months, I now have a summarization of the QuickBooks data into the format that I want to use. So that's critical to do it as step one. Same process on the balance sheet. Here's the balance sheet out of QuickBooks. We started with 12 months of data. Now the trick in doing this in QuickBooks, I will tell you, is you have to go into the report feature and go into modify report. Don't try to do this from the pick a balance sheet. Go into modify report, and then you'll actually select 12/31/2010 as the beginning range, and then 12/31/2011 as the end. And then there's a section called columns, and you'll drop down that columns box and look for the months. And so that should produce a P&L that looks like this straight out of QuickBooks that you can export into Excel. So once you have this one, same kind of thing, is we're going to go over to our cash flow model, and we're going to pull in the assets as the summarization. And once again, you're just going to pick out these items and look above and pick out the items that balance. Now the nice thing about this shell is underneath the total liabilities and shareholders equity is there's a check figure that makes sure that it's in balance. And so if you've missed an item and misidentified it, there will be a number in this line that checks the validity of that. And so once you've got that, then you've got the basic elements ready to go. So now let's start using